Hello and welcome to Reliance General Insurance Brobot Interact, where we bring you key insights from the automotive industry. And today we are talking about a subject that's important to all of us, insurance. I have with me here Sarbvir Singh, who is the CEO of Policy Bazaar, India's leading insurtech platform. Sarbvir has had over 25 years of experience in global corporate leadership, holding key positions in places like JP Morgan and Network 18 in India, Emerson Electric in Hong Kong, and Citi in New York. He has also been a venture capitalist. Joining him and me is Tarun Khanna, President and Head Digital Business Strategy and Marketing, Reliance General Insurance. Tarun is a seasoned leader in the financial services industry with a proven track record of driving growth and innovations across domains. In his current role at Reliance General Insurance, Tarun Khanna has been key in leading its transformational initiatives and also steering its direction strategically in a rapidly evolving market. So it's a really heavyweight panel. So let's just dive straight into the discussion. A lot of vehicles in India go uninsured, and you'd be able to tell us about this clearly because you see it across insurance. What is the quantum of vehicles in India that's uninsured, and why do you think that they're left this way?
So, Renuka, it's depending on what kind of vehicle we are talking about. So, for cars, it's about the order of 30% or so. For two-wheelers, it's actually even more than 50%. Now, the reason is that finally, after a certain point in time, customers feel that the cost of insurance is too much and they don't see the need for it. So, you may be driving in a small town or you may be using it for very small local areas, just commuting. So, you don't feel the need to pay. And as you know, in our country, because compliance is not always 100%, so people can get away with it. So I think that's the main reason. Otherwise, people do understand that, especially when cars are newer, that insurance is very important for them.
Yeah. Do you think this is because of the high cost of insurance, the initial cost, and of course a yearly cost? Because a lot of people buy cars on EMIs. And that's like a monthly payment, but there's a high yearly cost to insurance as well.
Oh yes, Renuka. So you see about close to 80% of the cars and vehicles which are bought in the country are on EMI. Right, so there is a financial institution which is funding them. But what happens to insurance payments, right? They come in one lock, stock, barrel for the year. Most of the people think that I will buy at some point in time. It is a decision which gets delayed. And that's what, Sarbvir is also talking about, that a lot of people delay their decisions. They don't think it's necessary. While it is a very essential element for a consumer to be on the road and be safe, insurance is a must. But that's how you see it, right? Financial stability is an important factor.
Has it been hard? I mean, when you put insurance out there in the market, how hard is it to convince the consumer that this is essential, it is key? Why are consumers not realizing the importance and the safety to themselves when they have insurance?
Absolutely. I think, when you talk to customers, and we keep trying to understand this point that you raised, I think 2 or 3 things come out. One is what we discussed upfront, affordability. So people feel that why should I pay so much money upfront when everyone believes that this accident is not going to happen to me. It's going to happen to someone else. I think the second thing is, Tarun also mentioned procrastination. What is the urgency to do it today? I can do it tomorrow. I need to buy this thing today, a phone, pair of jeans or whatever, is more important. And I think the third thing is sometimes awareness. I think people's understanding of insurance can actually be quite poor. So they view it as something like this is going to the insurance company, we are not going to get anything out of it. Not understanding that third-party insurance is mandatory. I mean, that's the law of the land. And number 2, actually insurance protects you, right? I mean, accidents can happen to anyone, anywhere. And if they happen, they can really save you from, making a huge hole in your pocket. So I would say that these are the 3 broad themes that we find. The fourth theme, which is very interesting, is that, in 2018, when the new Motor Vehicles Act came out, and there was a lot of fear that was created that, the challenge will be 2,000 rupees and above. Insurance just took a spike. There was a huge spike in September of that year. But, again, as the years have gone by, people have realized that 2,000 is more a theoretical number. And people are able to manage in less. So, again, we've gone back. So I think a little bit of fear is needed, clearly. And number 2, I think more awareness is needed, that insurance is actually good for you.
Absolutely, I think so. And I think, even way insurance is disbursed in this country needs to be quite different. And I think you guys have done something different. So can you tell us a little bit about PayD, what it is and how it's different, and just a little about the product?
Sure. So pay-as-you-drive insurance, or PAYD as you called it, actually originated around the time of COVID. Because at that time, a lot of people were not driving their cars or not driving them much at all. And we noticed a huge decline actually in the number of people buying insurance. And we said, what can we do about it? And one of the first things was that let us tailor the insurance to the person. So if a person is not driving a lot, at least they should buy third-party insurance, and then maybe they can buy plans, which are, so right now you can buy 2,500 kilometers, 5,000, 7,500, 10,000. So we tried to say that, look, you buy what you need. And if you think about it, right, originally the insight came out of COVID, it came out of people buying more and more second cars. So I'm sure you know now, used cars are a bigger market than new cars in India. And then it also came out of this insight that if I'm not driving so much, why should I pay insurance? So we combined all of that and we said, look, you pay for what you use. And hence, you can sort of make the first price very much affordable. And just like, now in India, we are used to recharge. So the concept that if I buy something and if I need to buy more of it, I, pay more money, etc., is quite well ingrained. And we said you can recharge and, you can move on. So if you ask me, to our surprise, because sometimes when you do such innovation and you need a partner, first of all, I would say we need a partner like Reliance General Insurance to see this thing. Insurance is not an industry where innovation happens very quickly. It's, we still do things in a very traditional way. But I think Reliance saw the same opportunity that we did, and we were able to come to market. A lot of, work was required from a technology perspective to bring this. But consumers really lapped it up. So to our surprise, not only were people buying when we were assisting them, but a lot of people were just buying on their own, because I think they got this concept of I should buy, what I need.
Yeah.
And so it's done really well.
What convinced you about the product and about this idea to actually collaborate and come together on this?
I think the 4 factors that Sarbvir spoke about, right? Procrastination, affordability, everything was coming together for us when we were looking at why consumers are not buying. The voice of customer was pretty clear that I am paying insurance and I don't get anything back. And that's when we realize a lot of people are dissociate from the fact that, my car, I run very little. This is my secondary vehicle. I primarily use a two-wheeler. We realize this, that consumers in our country, smaller towns, they're all very happy driving their vehicles on the weekend. So we brought these sashes. And it was an instant success. We saw consumers and then we learned from the consumers. Why Reliance was into it? Because we clearly saw that there was a need. We had to test it. All the hypotheses around in terms of, how it is going to behave, you will have to try. And the key decision for us was together to try, build a process, and then see how it matures. And over the last 2 years, we've seen it maturing well.
Yeah. So I have a couple of questions. Now, I'm a consumer. What I'm understanding is pay as you drive means when I drive my car, say less than the normal amount, which is about 10 to 15,000 kilometers a year, I can actually now opt for an insurance which will charge me a lot less. But will it give me the same benefits as the other insurances is something that I'd like to know.
Absolutely, and that is a key question. I think the benefits are exactly the same. The only thing that you have to be careful of is that you have to stay within the limit. So if you bought for 2,500 kilometers, you need to be within 2,500. And then there's a grace, amount of kilometers that are allowed, but you need to recharge after 2,500. But in that period, you are covered exactly like anyone else is covered. You have the same cashless, claims experience. You obviously have the third-party coverage, which third-party coverage is for the entire year. So that has nothing to do with the kilometers that you are driving. But otherwise, you have all the same, I would say, facilities and conveniences that an insurance has. It's just that you have to pay a little less to begin with.
So when you say top up, I'm understanding that, say, I assume that, okay, this is my second car. I don't drive it more than 2,500 kilometers in the year. So I will buy only 2,500 kilometers and I'm covered for the year at much less.
Yes.
Right? But we decide to take it out of town and we're using the second car and suddenly that second car racks up more kilometers. I can actually now top this up, right? I can recharge it and add more.
Absolutely, and it's a very simple process. You can do it from the Policy Bazaar app, you can do it from Reliance, or you can just even send a WhatsApp. and say that I need to add more kilometers, you'll get a payment link, you have to pay more money. I would say that it's very similar to how you would recharge your cell phone or your DTH or anything else that you buy on that same process.
Interesting. Well, let's flip it the other way around. Say I'm an ambitious person and I think I'll do 5,000 kilometers and I buy 5,000 kilometers and don't do that. Then what happens? Can I, like you have zero debt and all that, can you carry that over to the next?
Absolutely, yes. So when we realized that why this product has to be pro-consumer, we had to bust 3 myths. And in your panel, I like to state that so that people understand the third-party coverages for the entire year. Your theft-related losses are all covered for the entire year. Now it's about how much you drive, right? Like Sarbvir has mentioned that you can top it up. Now, what's if in the 9th month of the year I buy another top up, and a top up minimum is another 1,000 kilometers, and there's 500 kilometers left. No problem. Just carry it forward in the next year. So you're not lapsing any of your kilometers. You can choose to buy next time lesser kilometers. You can add as many times you want, and you're safely. And the beauty is that both Policybazaar and Reliance together keep reminding the consumer every quarter that just check your kilometers. The odometer, whenever you sit, you can check. And the process, like you mentioned, is so smooth that you can quickly top it up. You do it. And in India, 95% of the cell phones are prepaid. Same is the concept with insurance. We've created these small sachets for people to enjoy the benefits as much you want. You want to go to Goa? Top it up in the morning.
And interesting that I can carry it over to the next year as well if I don't use the car. So basically, it's a very flexible model that gives me insurance at a very convenient rate. But just tell me, how much would that differential be between, say, a regular insurance and if I were to do something like this, how much would it save me?
It can actually save you a lot. So if you look at a car in the first 3 years, you can save up to 50%.
Wow.
If you go to the lowest slab, 2,500. Even if you go to the 10,000 kilometer slab, you can save up to 25 to 30%. So actually the savings can be very meaningful. Now as you go down, it changes. So for older cars, the savings would be in the order of 20% because there, the TP component is higher. But still, it's a meaningful saving, and as you know, for newer cars the cost of insurance is also higher, so you can really save a lot. And I think the biggest thing that we have seen is that people can sort of feel more in control. You can buy what you need, you can add, and the most important thing, like we just discussed, you can carry it over. I think that I just want to repeat that because that is a phenomenal deal from a customer's perspective, that you're not wasting any money, because the whole thing we all have a big aversion to is waste, right? That I've spent the money and I'll get nothing for it. So this takes care of that as well.
Absolutely. Considering the unfair gap that there was between usage and actually what you're paying out for insurance, this is actually a great model. And I would imagine that a lot of elderly people or maybe second car owners that probably don't use the second car. But really, what is the target group? What group did you target?
I think when we rightly said, when we started off, we thought that this was a product for the senior citizen, the COVID, people who drive the second cars. But I think we've been found wrong. We've realized this is a product for each and every individual of the country. People living in smaller towns, the towns are small. Whatever best they do, when we started asking the consumers, the voice of customer came in that my total usage in a year is only 5,000 kilometers. So why should I even buy something else? So the product is for them, right? They're consumers who have both a two-wheeler and a car. They start, they only use it on the weekends. The second car, whatever you may be, because we made it so flexible that it doesn't restrict you. So entry is a lot more easier. And today, a lot of consumers are buying, and the intelligent consumers. We see people buying equally 2,500 kilometers and equally 10,000 kilometers. So they know the choice. They fit themselves in. They're asked the right set of questions. Our advisors are so intelligent, and they simply ask a simple question. How many years old your car is, sir? And how many kilometers you've driven? You divide that, you get an answer that in 5 years, this person has driven 25,000 kilometers. So, we'll propose a plan like 7,500. We'll ask, you want to top it up further, or you want to keep it to 5,500. People take informed decisions. And the good part we are seeing is people used to buy only the basic insurance. They would drop a zero depreciation benefit or a tire insurance or any other RSA coverage to keep the cost low. Today, what people, intelligent folks are doing is they save on the kilometers and they request our agents to add a zero depreciation in the similar price, make the policy more inclusive. So that's the kind of benefits collectively as organizations we are seeing.
What are the slabs that you have? Like you said that, a minimum top up is 1,000, but where does it begin for a consumer? What's the basic? What are the slabs and how does it work?
So it starts with 2,500 kilometers and there are slabs of 2,500 each. So 5,000, 7,500, 10,000. You can even have, as you can imagine, the slabs can be varied, right? And I think the future of this is actually going to be more flexible. Because one could argue that why should the next slab be, 5,000 instead of 2,500? These are all just, I think, restrictions because of making ease of the product. But I think over time, the way I see this whole thing going is that just like, India has got used to buying everything in small packets, right? Starting from, I think, shampoos, that 1 rupee packet or whatever. So I think this is, if you think about it, is the same thing that is happening in insurance. So the sachetization of insurance. And I hope, because if you see what sachetization did in all other businesses like FMCG, telecom, is that it just exploded the usage. So I'm thinking that the same thing can happen to insurance. I think what Tarun was saying is very, very fascinating, that when we started, we thought it would be elderly and second car owners. But now actually, when you think of it, all of India, which is living in smaller cities and more, that India is growing and is much more, coming up much faster. That whole demographic, for them, this is the right insurance. And they are used to buying things, in small installments. So I feel that if this thing, goes to its logical conclusion, it's very likely that all of us will buy insurance like this. I think this concept of paying for, unlimited kilometers, etc., will start become much smaller part of the industry. And only those people who really drive a lot will do it. And this whole cross subsidy will end, because effectively today, the drivers who drive less are subsidizing the people who drive a lot.
Absolutely.
And I think that story will change. So it could be really one of the, things start small, but I think this one really is picking up momentum as it kind of rolls down the hill.
Yeah, it's definitely an innovative idea and something quite different in an industry that has stayed static for so long. So something that's path-breaking, as I see it. And what seeded the idea originally? I mean, as I understand, you said COVID, the fact that people want things in small bite size. But what seeded the idea that, okay, let's make this generic across, I could understand that you did it for COVID because people were using the car limited. But then what seeded the idea that this can become a whole new model and we can continue, to offer it this way?
So I think COVID led to the start of it. Then our regulator has been very progressive. They gave us the opportunity a couple of years back that, why don't you start launching products, staying in the ambit of insurance, but you launch the products faster and you can think of these innovations. And that's what led us to the fact that we knew so many people are not buying insurance. We had to get them in. There was one start we had to do. Now, what we've seen is that this kind of an innovation has led to many more thinking caps getting done. Today in an insurance company, we are hiring product managers thinking what is the next level of productization which is going to happen. So the idea that it has to be affordable, right? It had to be sachet, and the fact that, we wanted penetration for all to increase were the key facets from a Reliance standpoint. But then we needed a perfect partner where people come and compare it with others. Right, the whole idea why Policy Bazaar as the first platform came up from the fact that there a consumer can come, compare between different companies, and the product has to compete with the regular market. We didn't want to call it a niche product. It is a product which competes. It's a different need which is addressing. So that was the whole concept. And then over to Sarbvir from the way they...
I would just like to add, one more thing, that actually there's a very fundamental issue which we have to grapple with in Indian motor insurance, right? Which is that right now we insure the car. We don't insure the driver. And this is a, very big issue, because the same car, as you know, can be driven by two different people with extremely different outcomes, right? Yeah. So this concept that diesel is worse than petrol or CNG is this or that, they work in a mass case. So if I look at it on average, right? diesel will be driven more than petrol. That's why it was bought. But in specific, that may not be the case, right? And there may be more careful drivers versus not so careful drivers. So I think the big change that products like this are going to drive is that we will start thinking about the driver rather than just the car. And I think that, if you ask me, will be a very seminal change in the way things are done. Because now the person who's driving well will be rewarded for their, carefulness, and the others who are not so careful will have to pay a price. So if you just sort of zoom out of this, while pay as you drive is one innovation, I think the direction we need to go is in that we start looking at the driver as much as we start looking at the vehicle and where it's driven, etc. So I think this is one of the first steps that has been taken in that direction. And I think at Policybazaar, because customers come in literally millions to us every month, we get a lot of, I would say, feedback, as well as we have a lot of data about them, right? As to what is their behavior, how many times have they crashed their car, what do they do in health insurance, do they buy other forms of insurance? So I think that allows us to put together a picture, which then we can share with the insurance company. And I think the innovative insurance companies like Reliance will sort of rise to the fore and make these changes. And of course, the industry, I think, will slowly change. So, but I think it's a very, very big moment in terms of driver first rather than car first.
Interesting, and I'm going to come to that change in just a bit. But before I get there, because you have a platform where people are comparing, as he said, across, how have you found pay as you drive success? Have you found more people opting for it? Do you think that the penetration of insurance has become more? So two questions actually. Have you found more people opting for it? And second part is, have you found more new first-timers opting for it?
Yeah, it's very interesting. When we started, we thought that only those people would buy this who were, very experienced or who would speak to our advisors. So in our car insurance business, only about 30-40% people speak to us, 60% buy on their own. And surprisingly, people who buy on their own quickly understood what this was, and they started buying themselves. So without actually our advisors giving them that, advice on how to do this. And again, I go back to the same thing. I think sometimes we underestimate the consumer. Actually, the consumer was used to buying on installments, or buying, as we said, they buy a car on installment, they buy other products in small sachets. So they said, oh, this makes a lot of sense. So today for Reliance, 60% of the comprehensive policies that are sold on our platform, 60% come from pay as you drive. This number used to be 10, 15, 20% when we started. But today it has risen to 60%. So I think the consumer is getting it. Now, first-time buyers, a very interesting behavior. We've actually even seen new car buyers, who are buying absolutely brand new car. They also sometimes opt for it. Because, again, if I live in a smaller place, I know I'm not going to drive further. And as you know, when you go to buy a new car, the cost of insurance actually is quite significant, right? And many times the options that are presented to you may not be the best and most economical options. So when they come to Policybazaar, they see these, products, and they are absolutely amazed at how much difference there is between what they are getting in the market and what they are getting here. So I think, we've been totally, I would say, positively surprised by the fact that both new car owners as well as people who have existing cars are themselves, getting this point. And I think that's really heartening.
Yeah.
And just to add from where Sarbvir left, right? Two key facts. Insurance has always said that it is mandated by law. So, the sales page or the innovation for say was always like insurance is mandated by law. Today, this happens to be the first product which is actually addressing a need. We're getting into that consumerism formula where there is a need the consumer has, and we're meeting that need with a product which best fits him. And that's where, he's rightly said that a lot of people, 60% of the people who buy on themselves, don't take a support of an advisor, are intelligent enough that they can differentiate between the product. Their need is getting met. Some buy X kilometers, some buy Y kilometers, and they really understand the price differential. So that insurance industry is actually reaching that stage where we are going to design products for needs, rather than saying that, yes, they are mandated by law and they will remain mandated by law. It's important to have them, but the consumer's adoption curve will change. So we see that thing starting in our industry now.
Can you tell me the key benefits to a consumer to buy pay as you drive? Like say I'm, someone who says, I don't need insurance, right? like a lot of people, So what are the key benefits that would get someone to adopt insurance and come in, and how does pay as you drive make that possible?
Okay, so let me give you two statistics, right? One, the insurance companies today, right, actually pay claims, and claims अच्छे हैं. Of the 100 cars we insure, on an average, about 14 to 18% of the cars meet with an accident, small or big, in a year. That means the probability and possibility of you being in the road, it's not that I'm a good driver, so things can't happen to me or something can't fall on the car, something like that. All is covered. And the impact of the cars, now cars are becoming expensive. You suddenly have to pay out-of-pocket expenses, and that can be a big dampener onto you. With these products, the pay as you drive, why it is important for you is that even if you are maintaining a car and you're driving less, you actually pay for the third party and the theft losses, which covers you, and you only buy the sachet of how many kilometers you did. So that's the need which is getting addressed here. And that's a big advantage, that you bring the cost down for it. Second, the comprehensiveness of the product is more, because in the same amount you can take more features regarding the car. The zero depreciation comes at the similar discount on what you get for kilometers. If you drive less, every other add-on which is there in a policy about 17 add-ons can be bought, from engine protector to zero depreciation to tire cover to RSA to key covers. Everything gets discounted with the same formula of the number of kilometers you buy. So that is the real pull.
So basically, if I were to buy, say, a regular insurance, I would pay X amount and then I would go plus. Actually, I would actually get all of that and more for maybe just the price, and even less than a regular insurance, because I'm paying so much less that all my add-ons would be included in this as well. So I get a lot more cover for a lot less.
You get a lot of value in this. You choose the value you need.
Now explain to me, this is the consumer side, and we've seen that, okay, it's beneficial to the consumer, but how does it work for the insurer? How does it become financially viable for the insurer? Is it workable?
So there are two aspects of how a claim is paid by an insurance company. One is the frequency model, which I suggested. The other is the severity, right? If a car meets with an accident, there is a certain amount of severity. That is likely to remain the same. But if you're driving less, and this was a hypothesis we carried 2 years back. Today, we are seeing a very clear pattern between cars. We have a sizable amount of pool where cars have been underwritten for only 2,500 kilometers, 5,500. And there is a gradient in the frequency which we are seeing in terms of accidents, which means if we are charging low, it doesn't mean that we are likely to be at loss. The consumer actually is benefiting with us by also claiming less, because the number of incidences happening on the road with these consumers is less. So hence, I would not say highly profitable, but a product which is right fit for the consumer because he pays less, and also equally not burdening on an insurance company to run the product for long. The other key aspect, which Sarbvir will share that with you, is what patterns we are looking at in the long term on the TP. Right, the third party premium, which is a substantial pool, how that is going to play with us is something we are trying to look at.
Yeah, I think just to add to what Tarun was explaining, see, from an insurance company's perspective, the losses are directly proportional to the amount you drive. Frankly, I think anyone who drives on Indian roads would understand why, right? If you drive a lot, it's almost, something or the other is going to happen, right? So I think minute you are able to right size the distance that you are driving, actually the premium makes a lot of sense. Second thing is that for this, the insured, the customer, is giving you an odometer reading, is taking a photograph or a video of their car, which indicates that they are the lot of people who are at least not doing, who are pretty straightforward and who are concerned about their car and who are willing to, provide that information. So actually the insurance company, in my opinion, has two major benefits. One is they get a person who's going to drive less. And number two, they get a person who is largely kosher, who is, careful about their car and is willing to share everything. So these two things put together, I think, make this product very, very logical from an insurance company's perspective. I think the point which now, I think as a way forward, which we need the regulators' help on, is that I think the third-party premium right now has to be collected upfront. And especially as cars get older, the third party premium becomes a large portion of the total premium. So I think if we can convince and we can get a model going where the third party premium can also be charged only on a monthly basis, then I think this model will become exceptionally powerful, and I think will be something that consumers can really look forward to and buy. So as I was telling you, that on new cars you can get up to a 50% discount or 60% discount, but then as the cars become older, the discount becomes less because the third party part is higher. Now there also you could get, imagine, a 50-60% discount. I think we would benefit, in a strange way, the industry would benefit by getting more cars insured. So actually the volume and the amount of premium they would collect would go up, and we would be able to give consumers a proposition that they like. So if the regulator is listening, I think this is the next direction that we need to go in. And actually I'm very positive, given the current state of regulation in India, that this would be considered. And of course it may take some time to be taken up, but it's very likely to happen.
Yeah. So do you think product like a pay-as-you-drive or pay-d will become primary products and strengthen the business model overall?
Absolutely. I think, if you think about it, there is no reason to believe, like for Reliance, if it can be 60% of their business, I think other insurance companies should also, smell the roses. I think this is definitely going to be one of the things. Now, how large it becomes is dependent on, the sort of variation around how much people drive. But I feel that it will start becoming a more primary product. And now 2 years, 3 years into the product, we can confidently say that it works for the insurance company and it works for the customer.
I fully agree that till the time we're meeting the needs of consumer and there is some chord we are able to strike for the consumer, it works. Be it a preferred garage network or a pay-as-you-drive, these specialized products, we call them specialized products because there is a variation which is for the consumer. Till the time as an insurer we are able to meet such needs, I don't really see any reason why this won't be preferred by the consumer over a regular product. The regular products have been there for eternity, right? For very long years we've been selling them at the same standard pricing. The need addressing is important, and collectively we found that we've been able to strike a chord with consumers. And like he mentioned, you're getting good quality consumer. Right, you're actually able to talk to a consumer because he's generating a video, giving an odometer reading, he's informed, he understands this. It's not something that he's getting into without knowing it. The whole process is such sweetly defined, and we've learned through the years. Right, that is what intelligence we're likely to carry in some of the external versions which are going to come now forward. Right.
Yeah. Do you see a pattern kind of emerging in the way that this is being adopted vis-a-vis, tier 1, tier 2, tier 3 cities, or has it been across all?
It started with a pattern, we thought, right? And it can also be the selling strategy at times. But the way it is now getting adopted with the size and scale, which you mentioned, at 60% of the policies are being sold, so it cannot be a niche. It is equally competing with the need.
And actually, if you think about it, if we just look out into the future, see what is happening, electric vehicles are becoming more and more part of the landscape. More and more cars actually talk to some kind of a cloud system or something for various reasons, whether for preventive maintenance, etc. So you can actually imagine a day when you would literally not even need to give your odometer reading or anything, because we would have the ability to read that. And then we can actually almost show you that, look, this is how much you drive, this is the right policy for you, and this is how much you have to pay. And of course, there's always the option of buying a standard policy. So actually, I think the direction that the industry is going in terms of more connectedness, more digital, is actually very much in favor of products like pay-as-you-drive. And we remain super optimistic that this is the way forward.
One area which is a very important critical juncture for us to know that the product is doing well is at renewals. This is the second year of the product. We're completing the second year. And we are seeing a clear pattern. The people who bought pay-as-you-drive are sticking to it, which means they find value and they are renewing their policies. That's a beautiful part about this, that we are in the second year, we're consistently seeing patterns, and voice of customer is very important. We constantly keep talking to consumers to figure out, is there something we can improve upon, right? That's how the whole, like Sarbvir is mentioning, the product took its, curve, that who the consumer is. Right. So that's an essential and very encouraging, facts we are seeing in terms of renewals.
So I'd like to wrap it up by going back to something that you said about change and the way the industry is changing and more focus on the driver. So what do we expect in further innovations now? Like you said, I think what you said, driver, because globally it is really the driver, how well the driver drives, what color car he buys, his personality that defines insurance and actually how much he pays. And there's a differentiator between people on the very same car and the same product. So that hasn't happened in India yet. And do you think we'll see that in the future? And do you think, I think it's necessary because it will get our roads much safer and drivers much focusing more on what they do in their car. But do you see this industry evolving in that manner?
Absolutely, Renuka. If you see, the insurance industry is now, as it scales, will go in the same direction that every other industry which has a lot of customers does. Which means, first thing, you have to segment the customers. Not all customers are the same. So you will find products start to emerge. One is, we've just discussed one direction, which is the amount of kilometers you drive. I think you're going to have people who drive flashy sports cars will be different from women drivers, from elderly, from people who buy minivans to people who buy SUVs. This will start emerging. And if you see the global example, you'll find that sharply defined segmentation is a key part of both understanding what are the requirements and of pricing them correctly. So I think this is the way forward, and what is encouraging for us is that we have insurance companies like Reliance General who are willing to take this leap of faith. Because see, when you start, you can't be sure, right? Things will happen. But I think if you use first principle thinking and you just look at logic, there's every reason to believe these things will happen. So we are already, I think, seeing this in different areas, but I think the focus on the driver and asking maybe a few more questions. I mean, abroad, if you see, sometimes they say that, look, this is your quote, but if you answer these 6 questions, we can actually change the quote for you. So I think those are the kind of directions that we'll go. And, as more and more people buy from digital platforms, these things become easier. The problem is if you're buying offline, these questions can't be asked or answered reliably, right? Because we don't know who's answering the question. But in our case, the customer is there, customer is, answering, and, slowly that maturity will come. So yeah, I'm very, very optimistic that this is the way forward.
Same here. I see a lot of products going in the market, from credit score to driving patterns. We are into a world of connected ecosystem. The more cars are coming from every manufacturer, and you there see that happening. All this data is going to converge at some point in time. So we are going to go to the households, to the consumer, to the driving patterns, and create products for you. And hopefully all this leads to a higher penetration and safety on the roads.
Absolutely. Do you think that there is a necessity for also regulatory mandates? Because credit scores, say, you decide to disburse insurance based on credit score or how the person drives or how many times he's had an accident, but maybe a next insurer won't, and that makes you non-competitive. So is there a regulatory mandate that's needed that credit score will become important?
So actually the regulatory mandate is already there. So the regulations now say that every company must offer a pay as you drive or pay as you use kind of insurance product. So I think as that, as those products roll out, this thing will happen. Yes, regulatory change is needed on the third party side, but my sense is that if everything else happens, that will also come. So actually, if you ask me honestly, it's up to the insurance companies and the marketplaces to make this happen. Regulation, at this point at least, is not the, I would say, limiting factor. In fact, the regulator is perhaps a little one step ahead of the industry in this case.
Yeah, our regulator is very progressive. We are in a world of data-driven facts. As we generate more data, actually helps the entire industry cause. You generate data, you show patterns, you make people believe in it, and keep trying. I think everything is right. The way the country is moving forward and our regulator is progressive, we should see a lot of these things coming to reality much faster than we anticipate.
Well, we as consumers are definitely happy. Keep innovating because it makes it better for us. We hope you've enjoyed watching. And remember, insurance is important. Do remember to get your vehicle insured.